Okay, before all the FUD starts getting churned about this SFT, let me tell you one thing. I have looked into this more than any other thing that I have looked at in the past year. So please, if you have any questions or want to know the reality about this SFT, you should come to me. There's no magic here. It's meant to cover FTDs and short positions. This is a fact that no one, despite feelings, can get away from. Now, what I'm going to show you here is the ETF processing specific guide of the NSCC, and this is directly from the DTCC Learning Center. Now, NSCC's ETF process automates. Now, hear me out. NSCC's ETF process automates the creation and redemption of ETF securities when the underlying securities are eligible to be cleared through NSCC. NSCC reports, clears, and settles ETFs and their underlying securities through its creation and redemption process, which is basically the manipulation of supply and demand. Create and redeem as needed for the primary or secondary market. Now, ETF processing includes a nightly distribution of domestic, foreign, and fixed income portfolio information. You can review the ETF portfolio constituents either online or in a data file. I've already tried to access this data. I can't because I'm not a DTCC member. I cannot access this information. I tried to get the service guide, but I cannot access that either. Now, the ETF processing service includes a web-based tool displaying the ETF portfolio, which is again what I was trying to access a second ago, and relevant cash amounts. Using this application, members can download data to an Excel spreadsheet. Members can also elect to receive a data file of the same portfolio information. ETF agents and authorized participants can access the trading relationship management, a self-service web-based tool that enables them to monitor and maintain relationships in connection with these create and redeem transactions. Now, ETF processing includes a nightly distribution of domestic, foreign, and fixed income portfolio information. Use customized portfolios to create and redeem the ETF within NSCC's ETF processing. We have 3 bullet points here. We have NSCC allows participants to customize portfolios by excluding specific securities and substituting them with cash or with another NSCC eligible security. So this is like musical chairs of dog shit. Now, NSCC can support ETF processing when the underlying security is ineligible at NSCC for ETFs that have been created and redeemed against cash. So far, we have introduced a variety of terms and concepts, such as buying and selling or holding and writing options, but there are other secondary markets that describe these various transactions and their consequences, including long and short, opening and closing. Let's take a look at those now. Now, how this service works, on each circle to learn more. ETF process flow. On the day before trade date, T-1, participants receive a portfolio composition file either through a web-based application or in a data file, listing the securities in each ETF. The data file also identifies the cash amount in each portfolio and other relevant information. Trades eligible for cash creates and redeems show a cash creation amount on the portfolio composition file. On trade date, or T, participants can place a create or redeem order through the distributor. The distributor delivers the order to the ETF agent. After receiving the ETF agent, transmits an instruction file for the create or redeems to NSCC. Night of T, NSCC transmits an instruction detail file showing the details of the creates and redeems to participants with activity. The information in the file can also be viewed by members who subscribe to Universal Trade Capture, which is UTC, through the service's data output. This report serves as the contract for the creation and redemption activity. Both the components underlying the ETF and the ETF itself are processed through DTCC's normal equity clearance and settlement system. Create and redeem transaction fees are reflected separately in the participants' end-of-day settlement. Cash amounts for the transaction fees are sent directly to money settlement and are settled under a unique NSCC code. So basically, they have it all set up. It's all ready to go. And let me find the actual filing.
The contract expire worthless. The point being is that
and
as
we
the
will
owner,
look at that real
you are
quickly.
in control,
Actually, let's just go to my
and the
emails
price of that control is the premium paid when purchasing the contract.
And this is approved as of today, the day before June. Now, again, if anyone's trying to push magic bullshit, there's no magic here. Let me tell you.
Owns a contract. It would then stand to reason
exactly what
that
I've been stalling out. This is exactly why all the narratives in the media have been going around. They need to stall tactics because the SFT got the clock reset and it just now got approved. I've been predicting all of this shit.
In return for accepting that obligation, the option seller
this was
collects
the
the
last
premium
thing that
paid
I
by the
needed
buyer.
to confirm
And,
everything.
similar
I
to
can
the
sit
long
back and
position,
relax.
the term
This is
short
the last
is
thing I
another
needed.
definition
It's
as
approved.
well. This one
I
implies
was
a
shocked it was
bearish
proof
market
today. I thought they were going
outlook
to
or
kick it
position.
even further.
If you
That's
own
typically
puts,
what they do.
sell calls, or
Basically,
short
right
stock,
here,
you are
what
likely
we're gonna look
looking
at
for a decrease in market value,
is
and therefore short the
basically
market.
in a nutshell. In
However,
SEC,
being
taking the
short
place of
carries
Fed,
with it its
central
own
clearing,
inherent
repos
risk.
going bye-bye
Click the
slowly over the
assignment
next 8
tab
to 10
below
months.
to learn more.
I believe,
As an option seller, the
they short it
investor
with
is
the repo,
obligating
they cover
themselves
with
to
the
fulfill the
SFT.
terms of the
Because
contract should they be called upon to do
what we
so.
do, what we can
In
read
return
right
for
here,
accepting this
if
obligation,
anyone tells you
the seller
otherwise,
receives the
they're
premium
full of
from the
shit,
buyer
because
upon the
this document
execution
was
of the
printed
trade.
today.
If the buyer chooses
Disagrees.
to exercise their
The
contract,
borrowers
sellers will
typically
receive an
use the
assignment
borrowed
notice from
securities
their
to cover
brokerage firm and
short
have no
sales
choice but to
or
fulfill
fails
their
to deliver
obligation.
that may result
However,
from
if the
either
investor no
short
longer
or
wishes to
long
hold their short
sales.
position and thus be obligated,
And then it
they
says
can
down here,
simply
a
buy
short
back
sale
their
is
short
any
contract
sale
to
of
close
securities that the
prior
seller
to
does not
assignment,
own
thus canceling
or
out their
has
obligation.
borrowed. So again, SFTs are transactions in which a securities lender
An opening
loans
transaction
securities
is one in which
to
you are
a
either
securities
creating
borrower.
or increasing
The
a
borrowers
position in a
typically
particular
use
security.
those securities
If you are
that they
purchasing
just
an
borrowed
option to hold
to
in your
cover
account, whether
short
you already
sales
own a
or
like
fails to
contract or
deliver.
not,
Now,
this is
what
an
have we
opening
seen
purchase
the
transaction.
entire market
You are
this
creating
last
a
year and
long
3 months?
position.
Everything
If you
is
already
shorted
own a
50%
particular
or
option
more.
and purchase another just like it, this is also an opening
Get ready
purchase
for musical
transaction.
chairs, and
In
you
this
better
case, you
know
are increasing
where
a long
to
position
sit
in that option.
when the music stops.
Conversely, if you are writing or selling an option contract,
Again,
this is an
the
opening
whole reason
sale
they're doing
transaction.
this is to
If you have no position in this option, you are creating a short
liquidity
position.
exposure.
If you have already
They do
written
not
an
want
option and write
liquidity.
another option
There's
contract
too
with
much
the
of
same
it,
terms, you are
especially when the
increasing
repo
your
comes
short
down.
position in that
That's
option.
where it's all trapped.
Click on the video
is
to
in
learn
the
more.
repo. So again, they're only wanting exposure from that source.
Opening transaction
And they
is
have
one
protocol
in
set
which
up.
you are either
They've been planning for this for a year and a half.
increasing a
Let's go.
position
This
in
is
a
it in a
particular
nutshell.
option
All
contract.
tied to the last.
If you are
Basically,
purchasing an option
if you think
to
about it,
hold in your account,
2008
this
was
an
the midpoint.
opening purchase
Basically,
transaction.
1970 when derivatives were
long
created.
position.
So let's go.
If
2
you
generations
already
of
own a particular
inflation.
option and
We're about to get the
another
other end of it.
just like it. This is also
let's
an
go.
opening purchase